Good evening, ladies and gentlemen. This is Barry Norman on behalf of Trade Time, and welcome to our class on understanding price charts. Now, tonight's class is sponsored by Trade Time, a very unique way to trade. They allow you to define your objectives, customize your account, and trade in the world's largest markets. Account customization allows you to select from a range of options to build your own personal trading account. They also give you a full array of trading tools, including daily analysis, weekly reviews, focus articles, and live signals. And they offer you one of the most robust trading platforms in the marketplace. It's dynamic as well as user-friendly and designed with you in mind. Their Trade Time platform is an award-winning platform that gives you intuitive and user-friendly. It offers you advanced charts and indicators, customized alerts, and one-click trading. They also push out to you all day long live trading signals, but they don't just tell you to trade an asset. They tell you which direction at what price point to enter the market, what the objective is, the first and second, where to put your stop loss, and they let you see how many other traders on the platform have exercised that signal and traded that asset based on the signal. So remember, Trade Time is a very unique offering that allows you to unleash the trader in you. They invest in preparation, personalization, and success. They have the next generation trading platform, and they offer you many ways to trade and lots of education. And tonight's class is part of the education program, and tonight's class is being recorded. And if you want to see a recorded version of this class, just go to www.investing.com and look under the education tab, and then go to webinars on demand, and you'll be able to see this class in about 24 hours from now. So let's talk about understanding price charts. Now, it's no secret that online trading can be performed more efficiently if you possess the necessary tools. And a good place to start is with charts. Now, whether you're using fundamental, technical, or quantitative analysis, there are a number of methods used by traders to predict movements of assets. Some traders focus on news and interest rates and economic variables, while others prefer to use charting tools and indicators to guide their trading decisions. However, no matter your trading method, you'll need to know how to read a chart. There's no escaping it. Luckily, we created this detailed class to help you get started. Now, you must learn to crawl before you walk. Charting is no different. First, you need to have a good understanding of the basics before you can progress to the advanced stuff. Now, a price chart is simply a graphical depiction of the current and historical price of an asset. Charts typically have several different display methods for displaying price. One method that price can be shown is called Japanese candlesticks. Candlesticks are the most commonly used display chart for indicating price on charts. Now, there are theories about using candlesticks to predict price. Candlesticks also is said to provide a nearly instant sentiment read on the marketplace. Now, I must give you some explanation about candlesticks. Candlesticks have been around since the 1700s, but today they are like the buzzword in online trading. Not because they're better than any other price chart. It's because traders like these reds and the greens, and with the development of online trading and computerized charts, what used to be a very difficult charting system has become a lot easier, so it's become a lot more popular. When I started trading 40-some years ago, we had to do hand charting. And so the preferable chart was a bar chart. Okay. Because candlesticks took too long of a time to draw on your charts. And traders who were doing hand charting didn't have the time to waste drawing these candlesticks. But there are three basic types of charts. Prices can be displayed as a line chart. A line are a good way to simplify the display of price. A line chart will show you the closing price for each period. Another way to display price is by using a bar chart. A bar chart is similar to a candlestick chart. They all use, or both of them display, the open, the high, the low, and the close. A bar chart will show you where the price opened, the high, the low, and where the price closed. Exactly the same as what you see on a candlestick chart. So a line chart is the most simple of it all. You can't make trading decisions from a line chart, but you can get some general idea of how a price is moving. So a simple line chart just draws a line from one closing price to the next. When strung together with a line, we can see the general price movement of a currency or an asset. A bar chart gives us 4 pieces of information and gives us an easy to see visual look at how price is moving. Each one of these bars contains the open, the high, the low, and the close. But by seeing all of this in a bar, we can see prices that have common points that aren't just common by the closing point. We can also see opens and closes that were very common. We can see price movement and price alerts by using this visual image of price movement. So each one of those bars shows us the open, the high, the low, and the close. So what we do is we draw a little stick to the left at the open price. We draw a little doohickey to the right at the close price. We put a dot at the highest price that asset achieved during that period and the lowest price. So if we're looking at a half-hour chart, every half hour, these 4 numbers are put on a chart. If we're looking at a one-day chart, the beginning of a day, the close of the day, the high of the day, and the low of the day. We then draw a line connecting the open, the high, and the low going through the open and the close. If we step up the ladder from the open to the close, this is a bullish signal. If we step down the ladder, it's a bearish signal. So the only difference between a bar chart and a candlestick chart is in a candlestick chart, we connect the open and the close together to form the body. And we fill them in with green and red. Same information, just a different visual outlook. So a candlestick chart is just like the bar chart, open, high, low, and close, but we've drawn the line across for the open and the close, and then if it's a bearish time segment, we fill that chart in, that body in with green. If it's a bullish time frame, we pull that candle in with a red color. Now, although bar charts and line charts are quite popular among Western traders, Japanese candlestick charts and additional patterns were introduced to the Western financial markets in the early 1990s by a chartered market technician named Steve Neeson. The popularity of candlestick charts has soared among Western market analysts over the last few decades because of its highly accurate predictive nature. Candlestick charts play a crucial role in better understanding of price action and order flow in the financial markets. So on a candlestick, we do the same thing. We draw the line across at the open. We draw a line across at the close. We put a dot at the high and a dot at the low. We then connect the opens and closes to form the body of a candlestick. We connect that body to the high and the low, and these are called wicks or shadows. If we step up from the open to the close, that's a bullish candle, and we fill it in with green. If we step down from the open to the close, that's a bearish candlestick, and in today's market, we fill it in with red. In the old days, it was a black and white system because it was easier to use the side of your pencil. And this gives us the bearish signal. Now, their Japanese candlesticks are a complex trading system. So before you can read a candlestick chart, you must understand the basic structure of a single candle. Each candle accounts for a specified period of time. It could be a 1-minute candle, a 60-minute candle, a daily or weekly candle, just like a bar chart. Regardless of the time period, a candle represents 4 distinct values on a chart. The opening price at the beginning of the time period, the closing price, the highest price during the time period, and the lowest price, or the open, the high, the low, and the close, also sometimes referred to as an OHLC. So as you can see in the example, when you read a candlestick chart, depends on where the opening and closing prices. If it will provide you information on whether the session ended bullish or bearish. When the closing price is higher than the open price, it's called a bullish candlestick, and hence the reverse. So although the same 4 values are also found in the Western style bar chart, the bar chart uses horizontal lines to the sides of the vertical lines to project the open and the close. But a series of candlesticks on the chart will help traders identify the character of price action more definitively, which helps in decision-making capacity. So basically, the bar chart and the candlestick chart contain the same information and are drawn on using the same prices. So one of the best reasons to learn how to read a chart correctly is so that you can apply technical analysis. Not every trader believes in using technical analysis, but it can be useful even if it's not your primary trading method. Technical analysis relies on the price that is on the chart you are using. Most charting systems will allow you to add technical indicator tools to overlay your charts. But once you've decided on which type of chart you're going to use, and most of you out there will most likely use candlesticks, or you can be an old guy like me who prefers using bar charts, but they're all basically the same. Now, candlesticks can, like I said, be complex. They're also not just a charting system, they're also a trading method. And then in that case, you have to learn what each candlestick is trying to tell you and what the preceding candle is and what the next candle is to see candlestick patterns. And there are 32 distinct patterns of candlesticks that make up the trading system. But once you've decided what type of chart you want to use, you have another critical decision to decide with your charts, and that's called a time frame. And we've talked about that. A candlestick can represent a 15-minute period of time, a 30-minute, a 1 hour, a 4 hour, weekly, or daily. Okay. So you always want to check the time frame being displayed because you can use multiple time frames and you can change your chart from one time frame to the next. For example, a system may use a 4-hour and a 30-minute chart to determine the overall trend of a currency pair. By using indicators such as MACD and momentum and support and resistance lines, and then a 5-minute chart to look to rise from a temporary dip to determine it's the actual entry point. So ensure that the charts you're looking at have the correct time frame. So for your best analysis, the best way to do this is set up your charts with the correct time frames and indicators on them for the system you are trying to save. So let's go over to some charts and let's take a look at this on live charts. So what we want to do first is determine the type of time frame we want to look at and understand what we are looking at. But as you can see here, you have many, many choices in time frames in which to look at an asset. So here we're looking at the Euro US dollar in a 2-hour chart. That means every 2 hours, a candlestick is placed on the chart. So at the beginning of that 2 hours, you draw the open. At the end of that 2 hours, you draw the close. You put a dot at the highest point it reached in the 2 hours and a dot at the lowest point. The prices are indelibly etched. Price does not ever change after it's over. So when we move that from a 2-hour chart to a 1-hour chart, all we're seeing is each one of these candles covers that 2-hour period. So now we have 2 candles, or because we're using a 1-hour chart, so we're seeing a very precise time frame. We can also drop it down to a 15-minute chart. That means that we have 4 candles making up every 1 hour. So we're seeing more precise information. But your time frame should reflect the type of trading you're doing. But when we talk about time frames, there's something that many traders forget to do, and they end up in trouble. And whenever you're trading, the first thing you should do, besides looking at setting up your chart, looking at the time frame, is setting up your format. And the first thing you want to do is set the time zone that you are trading in. So in other words, you want to see that time zone equal to your home time zone, because you don't want to miscalculate. Or if you want to use UTC like I do, I use universal time for everything. That means I know all of my events by universal time. I don't use daylight savings time. I don't use my home time. I'm only concerned with that time frame. But if you live in Madrid, okay, or Paris, you might want to use this, and you're using everything on your local time. You want to make sure your charts are set to your local time, because you don't want to make a mistake, or you don't want to be looking at an economic event that you think is going to happen at 12:30, and you see how it's influencing the price of the charts, but the price of the charts is in UTC -2, where you're looking at an event or reading a news headline that's talking about something happening at 12 noon, but it's happening at 12 noon BST time or London time. Okay, it gets very, very confusing, and you have to make sure you have everything synced. Your chart especially, because otherwise you end up with a mess. So the charting system you're using will give you somewhere to set your time zone. And always, you can most of the time find it in the bottom right-hand corner, and you'll see what time zone is being used for your charts. Okay. Please make sure you do this, because when you're looking at the price lines on the chart, you want to make sure what they're cued to. So I'm just changing my chart back because, like I said, I use UTC for everything, which is just universal time. But it's one of the important things you want to do when you're setting up your charts. Now today, because of computerized charts, you can flip from bar charts to line charts quite easily, going back and forth depending on what you want to do. So like I said, I used to be a bar chart guy only back when I was charting by hand, and then I just carried forward. Today, I use candlesticks quite often. I'll usually do my analysis on a bar chart because it's just a cleaner chart to use without, I don't want the reds and the greens. And then I will flip it back over to my candlestick chart to use my candlestick patterns. But that's one of the ways you want to use a chart, or charting, or some things you should know about charts. Now let's go back to my PowerPoint. So to ensure that your charts are you're looking at the correct time frame for your analysis, the best way to do this is set up your charts with the correct time frame and indicators on them for the system you're trading, and to save and reuse that layout. Now realize that the timelines shown on the bottom of your chart are set to the particular time zone that the forex providers' charts are set to, which may be GMT, New York, or others. Make sure you set the time zone for your charts. So once you've selected your time frame of your charts, the most important step in using charts or any other kind of technical analysis is set a specific time frame. The value that you view are only relevant to the specific times that you establish for them. So charts help traders evaluate market behavior and help them determine where the security will be in the future. To make sense of the price movement depicted on a chart, traders have developed a number of different visual guides to assist them, which known in most cases are technical indicators. There are hundreds of different types of trading indicators developed to cover every aspect of trading, from trends to following a means reversion. Okay. So once you've decided on what chart works best for you, what time frames you want to use, then it's time to start adding some basic information to your charts. Any analysis done on a chart falls in the field of technical analysis. Now, I believe, regardless of how you want to trade, what information you want to use, and how much you want to learn, regardless of your strategy, you will need to put some basic lines on your chart to help you understand the markets. Okay, regardless of what strategy, regardless of who you are, doesn't matter whether you're a genius or a professional or a novice. Okay, I believe in building your trading foundation. And this starts out with being able to look at a chart and understand what the markets are telling you. Okay, because you need something that's going to maybe point out you're making a mistake or support whatever decision you've made. These are your building blocks. Okay. And if you stop and think about it, you can read that Apple did something or that Google did something and their price is soaring. But how do you know what was the average price? How do you know what it's soared up to? How do you know it's going to continue to rally? And once you've decided on that, how do you know what price you want to enter the market? How do you know where to put your stop loss? And how do you track the rally? Because just because somebody said something positive about Apple or somebody said something positive about Walmart doesn't tell you how far that price is going to move. It doesn't tell you what levels to start wondering. It doesn't tell you when to take your profit and run. And it doesn't tell you where to put your stop loss if the market starts moving against you. You're only going to get that from charts and technical analysis. Now, every trader should be able to add some basic building blocks. And these are done on your chart. And these are trend lines, support and resistance levels, and volume. They're not difficult to do, but these are part of understanding a chart and being able to read a chart. So one of the most important reasons you want to learn to use and start practicing with charts is so that you can start employing technical analysis. So as you can see here actually let's move over to the Bitcoin chart. So here on the Bitcoin chart, we've been able to drop a very easy trend line onto the recent price movement. We've been able to actually see other waves. We've been able to set up support and resistance levels and then add target zones using our waves and our pushes and eaves on our chart to start decide some basic trading. We've added into this our multiple waves, and we can see we're in a B-level wave, okay? And we're using our charts on real basic stuff here. We haven't gotten involved in technical chart patterns. We haven't gotten involved in all these indicators and oscillators that we can drop on the charts, okay? We just learned to easily be able to look at a chart and make some trading decisions, not decisions, gain some information. What decision we're going to make, where we're going to trade is a whole different story. But price action is what dictates everything in the marketplace. Now, one of the other reasons we want to use a chart is so that we can add on to it technical analysis tools. So like relative strength index, RSI, is a popular indicator which is dropped on a chart below price action. Then we have other indicators that are actually dropped directly on our chart, like Bollinger Bands. It goes on the price action on the chart and forms around the band. So there are many different uses for charts. And you can make them as simple or as complex as you want. You can get as involved as you want. But being able to put the basics on your chart and being able to read a simple chart is, like I said, doesn't have to be part of your trading strategy. It can be your warning system saying, don't make this trade or do make this trade. But again, you'll never be able to decide entry points and exit points without having a chart. You'll never be able to decide where to put your stop losses without looking at a chart. So on that note, I hope we gave you something to think about today. I hope we gave you some information about charting. And we'll talk to you in our next class when we'll talk about drawing trend lines on a chart and starting to use these charts to make sense. So have a very good night, and thank you for supporting Trade Time, and thank you for supporting investing.com. Good night now.